of the regular stream. Literally like 10%.
Oh,
I should have gone for like something. China is collapsing. Huge news. Kathy Wood just took a shit.
world ending now.
Yeah. Okay. Look, we'll start the stream right now, and then I'll cut off the first 3 minutes.
Yeah.
We'll just pretend like we haven't talked.
Yeah.
I can
And the
edit it
people at
out.
home have to keep quiet about this.
Exactly. So the 243 people in the chat right now, just pretend like we just started. Okay. Unthinkable bombshell. Okay. Hey Patrick, how are you? Glad to have you on the stream. I see you took some time off from preparing for your fight with Deontay Wilder, which is upcoming in October. You lost some. You cutting weight, I see, for the fight. But how are you, man?
Doing well. Doing well.
We spoke about it earlier, but I mean, your production quality has taken a few notches up. Looks phenomenal. Audio sounds great. Looks way better than ever.
It's always a struggle.
Yeah, tell me about it. So, what the hell is going on? Obviously, you know I'm a huge fan of China and communism. So obviously, I was sad to hear about the latest news. But can you explain to my audience and myself, since I'm included in the people who don't understand what the hell is going on with Evergrande? What's the story with this?
It's a tough story to understand because it's kind of breaking news, right? Well, it's been breaking news for a little while, but it's very hard to know what will happen. But essentially, we've got Evergrande, which is the second largest real estate developer in China, and that means that they're absolutely huge. I think they employ something like 200,000 sort of full-time employees, and I think 1.3 million sort of builders, like who are kind of hired on a ongoing basis. So it's a massive, massive company. They've got about $310 billion worth of debt, and it would appear that they cannot repay that. Now, this story, to a certain extent, started about a year ago when the Chinese Communist Party passed some new rules trying to deleverage the real estate sector, and it appears to have worked maybe a little bit too well. And there's kind of an ongoing sort of issue. I'm not an expert by any means on emerging markets, but there's a guy who's well worth listening to named Michael Pettis. He's an American economist who is based in China, and essentially, he explains that one of the biggest problems in China is that they do all of this what you might call malinvestment, just sort of bad investment, or they build things that don't make an awful lot of sense. Like you'll hear Americans saying, "Oh, look, the Chinese have built all of these super fast trains, and we haven't built any," but they don't realize it doesn't necessarily make sense to build the ones that they built. They'll have like a super fast train that's going out into farmland where no one needs to necessarily go at 200 miles per hour. And so
it's the same story with the empty cities, right, Patrick? The ghost cities?
Yeah. And it's kind of an interesting, the empty cities thing is something that has confused me for probably 20 years. There's a friend of mine, Hugh Hendry. He has a really good YouTube channel, and he was a very famous hedge fund manager, one of the guys who called the credit crunch back in 2007, 2008. And he, at the time, was all over YouTube with sort of a handheld video camera of all of these empty buildings all over China. And he said, this is a disaster. How is this going to work? But then, strangely enough, it seemed to kind of, they sort of held out long enough and people moved to those areas and whatever. But there still is just this general problem of there's a lot of sort of borrowing and bad investment that occurs in China. And so Evergrande is an example of this. And you would think that typically when a company borrows a lot of money, or we'll say just if a company invests in a project that kind of goes to zero, it's a bad project, that would be something that's sort of expensed on the accounts. But instead, it would appear in China that they tend to capitalize these losses. So all of these businesses, you see all of this growth, but it's just a growth in debt. They just borrow more and more money, basically until they can't anymore. So we see this issue of sort of huge leverage at companies like this. They're told that they have to delever, and you would look at the balance sheet and you see a huge amount of inventory, right? Because that's where sort of bad investment, these empty buildings that you're showing right now, that's where they would show, is on the balance sheet of these companies. And so when the government then tells them they have to deleverage, the answer is to sell those buildings. But of course, they're not really sellable, you know. And actually, another one that might amuse you a bit is that, you know, Evergrande are also in a bunch of other businesses, including the EV business, you know, because I think whenever things are going wrong, it's good to announce an EV startup. And I think they raised about 3 billion for an EV company. Not sure that there's any EVs, but, you know.
If in doubt, EVs shout. Trevor Nicola. Shout out to Trevor. If in doubt, hydrogen spout. So is this is this a systemic failure?
Well, it's huge, right? Like, I mean, there are estimates that there could be $220 billion worth of sort of valueless assets on the books of Evergrande, right? So if you know, there's a few people I put up a video yesterday kind of explaining the situation, and one person got very angry in there because I sort of said that the slightly clickbaity headline was, "Is this China's Lehman Brothers moment?" And that's basically what a lot of the press are saying. Like, if you go on CNN, they're calling this China's Lehman. You know, so we've got this. There's definitely a huge hole in Evergrande, and then the question is, what happens to it? And you would say, well, you know, who has lent to them? And there are hundreds of financial institutions that appear to have lent to them. An awful lot of them are Chinese financial institutions that are, you know, can be viewed as sort of quasi-governmental businesses, you know. So it's kind of a funny thing. Like the Chinese Communist Party, they don't want to be seen to do what the Americans did and sort of reward failure and bail out you know, a failed real estate company.
Yep.
And in many ways, they are trying to deleverage the economy somewhat. And but the question is, you know, in a country like China, essentially the government is going to decide who eats this loss, is kind of, you know, a good way of thinking about it.
If I have to tell you, from on a serious note, I absolutely welcome you to the fire in the thumbnail community. This has been a long time coming. You have joined the dark force.
I just copied the thumbnails off of your website, and I just changed the photo.
Exactly. Just the mere fact you called it a website says everything about you. For the 600 people, by the way, we tripled our audience since we started talking about Evergrande. 600 people right now. Shout out to you. Thank you for stopping by. If you haven't yet, I would assume that would be because you're living under a rock. Patrick Boyle's channel is on the screen right now. It's called Patrick Boyle. It's one of the most underrated channels if you're interested in any sort of finance, stock market. Completely no bullshit, no fluff from a professional. So please send payment to PayPal, Patrick, for that. Now, jokes aside, so do you think they will? Obviously, I heard some rumors that they're trying to get a bailout, right, Patrick?
Well, that is the thing. But even that was kind of, there was a big issue. I think it was about a year ago. There was this sort of leaked letter to the press that they had approached the government for a bailout. They claimed that was a forged letter. They claimed that that's not real, but it possibly was real. And you know, the issue is, I think that the government really does not want to bail them out. I think they want to make an example of them. It's very interesting. I was speaking to a friend of mine who runs probably one of the top emerging market funds, and he was basically saying that a lot of people are misunderstanding China right now, because they look at China and they say, well, there've been all these difficulties before, and China always pulls through it, But he argues that that was a different China. This is Xi's China. Xi is moving much more towards Mao's China. This is not modernizing China. Xi doesn't know much about business, doesn't care much about business. He cares about sort of big government and running the country. And we've kind of seen that even in the sort of attacks on the tech industry. And we see, I was reading the other day, ByteDance, the company that owns, what is it called, TikTok. The government placed one board member on the board. Now, there's 3 board members. One of them is a government person now.
Amazing.
This is the direction that China is moving in. So it's not really... They kind of upset the markets a while ago. They sort of overdid it maybe on their kind of knocking markets back. And then you see sort of a lot of government officials trying to calm down foreign investors and say, no, it'll be fine. My friend argues that it possibly won't be fine, like that their goal is not for you to generate wealth by investing in China.
So obviously, my position on this. I'm much closer to your friends' opinions than certain other investors, including Charlie Munger was probably the most high-profile guy on the other end of the scale. Basically,
what did he say? I didn't hear that.
He's advocating for the second position, which you just mentioned, which is basically, you're too Western to understand this hybrid culture, and this is all good. I think that I have a unique perspective because I've seen what communism does, and the main conclusion for me was that the system is. I keep coming back to that story about the scorpion and the tortoise. It's the same thing. They can't help themselves because losing control means they don't have a right to exist. Means that they would rather take the country down with them than lose control.
Well, even you see like the stepping on billionaires recently, like the stepping on a lot of the tech companies. Why are they doing that? And some of it is just a kind of a power consolidation. Like you can't allow these guys to get too important and too wealthy. And I have some friends who are Chinese, who are wealthy Chinese people, and they tell me that the situation is difficult there right now for business owners. And the thing is, there's a few interesting ways to look at this, because actually, with regard to your beautifully filmed video that you put up from your car yesterday.
Amazing quality, right? Production quality.
That's where you installed all those new
$50,000 studio. Yeah. $50,000. With the Iron Man in the back. You like the Iron Man?
Well, the thing that's in, the goal isn't to sort of scaremonger in this, because there's always things that can go wrong in markets. And for many people, they're probably not, not necessarily that heavily invested in China. If we try and look at a sort of a positive angle on it, or a way that it could not be awful, like the way it could not be a Lehman Brothers moment, is just that the real estate industry is just huge in China. And a lot of people don't, like, when you think about how big the real estate industry in China is, I saw a statistic yesterday that in 3 years, China used more concrete than the United States used in the 20th century. It's a big building industry, right? It's huge. It employs a ton of people. It equally draws in resources from all over the world, right? Like concrete is going in, steel is going in, copper, all of this stuff, So it might be difficult for Xi to hold power should that industry collapse, So, to kind of walk back from the kind of clickbaity Lehman thing, the real question is, and the real thing we have to look at is just how will this end? But equally, a question is, for investors, should you be invested in China? And many people are invested in China without really knowing that they are, because, you invest in certain index products. In fact, I was reading the other day, if you look at ESG funds are very heavily invested in China, in particular in sort of Chinese tech and things like that, because that sort of appears to tick many of those sort of ESG boxes, not necessarily the G one, and the E one is a bit questionable as well, but
Patrick, do you think, in all honesty, we're talking about it's a multi-billion-dollar company. I mean, before the collapse, it's what, like a $50 billion company, $60 billion company.
Yeah.
Can the Chinese government afford not to bail them out? And still, with the amount of jobs that will be lost, the instability, the chaos.
Well,
I think
it's interesting because also you've got to look at like the real estate sector in China in general has kind of slowed down over the last little while, just because they built an awful lot, and there's a lot of huge real estate businesses over there. It's hard to know how it'll work out, because the biggest lever that the government has is that the government is, to a certain extent, they control a lot of the banks and financial institutions in China that have lent to Evergrande. So they can restructure that in a way that sort of, kind of wipes out, we'll say, the wealth of the equity holders in Evergrande. And, they could restructure it in a way that there's not a collapse, but there's not a bailout. And, in many ways, like when we look at Lehman failing, and then the bailout a few weeks later of all the other banks through AIG, the US government officials were moving very fast.
Don't forget the bonuses. The bailout and the bonuses.
Yeah, well, it's important to get a bonus,
Of course.
But the government, they were moving so fast at the time, and they probably didn't know what was happening or what to do. The Chinese government, this is a slow unfolding disaster. Like, this story has been going on for about a year, and they've learned from the lessons of what happened or hopefully they've seen the example of what happened in the United States 13 years ago. And so, you've got to imagine that regulators and governments around the world have possibly come up with plans that are a little bit more sophisticated than what was done over a weekend back in 2008.
So I'm still trying to figure out why this happened. Is this just a series of unfortunate decisions? Basically grandiose plans with no business logic? Like, what led to this? Because not every day you see a company of this magnitude just implodes like this overnight.
Well, it's interesting because if you look at the growth of the company, you see this growth, but a lot of it, you see this growth in inventories. It's basically assets and liabilities growing together, and more debt been taken on. Because normally you would look at this and you would say, well, they've got a huge amount of assets. Their assets are greater than their liabilities. They've never lost money. I don't believe they've ever had a losing quarter, right? So how is a company whose assets are greater than their liabilities, that's never had a losing quarter, possibly bankrupt? And the answer is because a lot of the wins were fake, that they didn't really happen, like they built these things. And, people, I've never been to China, but friends who visited tell me that you can go around and see these, bridges to nowhere everywhere. And this is sort of possibly that coming home to roost, that you have this huge build out of stuff that isn't needed. It's just, it really is that you're able to cover up this. If a company is growing very fast, or appears to be growing very fast, they can borrow a lot to cover it up. But that's essentially a Ponzi scheme, right? Where you've got these huge losses there, and we don't talk about those, and you keep borrowing money and you keep everything going. But we then there always reaches a point where the problem, the real. Actually, I sent you an article yesterday.
Yep.
it was a Michael Pettis, but the guy I was talking about, and he describes, he has a term, I think it comes from the economist Galbraith, that he calls the bezel, taken from the
The bezel
word
meters.
embezzlement, right? And his idea is, he kind of argues that, we'll say, if you have a fraud, like let's take an embezzlement or a fraud like the Madoff scheme, right? There was a point right before the fraud was discovered where the fraudster is living large because they've got the
Yep.
money, and the person whose money they've got is living large because they think they've got their money in the bank. And so there's sort of this expansion, this economic boom that comes from this fraud, and then eventually one of the two parties doesn't have that asset, and you've sort of been I don't know, living on an energy that you don't have. Everyone's been living beyond their means, possibly, is
It's
what's
like having
real.
hundreds of thousands or millions in your trading account, right? And okay, I can spend it. I have the money, and then you press a button, withdraw, and then it just says, and then
Yeah.
it's, oh shit. That's pretty
Yeah, and
much it.
for the last few years,
Yeah.
you've been buying nice cars, eating out,
Yeah.
having a good time because you're rich. And then when it goes time to pull the money out, it's not there. And so, to a certain extent, you can see booms that are just based upon that. They're based on this wealth illusion where there is no true wealth actually sitting there.
That's a Madoff effect, essentially, as you mentioned. So we have a question here from Super Chat. Money for coffee. Did the money from the 2008 bailout get paid back to the government? I don't think so.
I don't believe so. No, I mean,
No.
I'm not an expert on how that worked
Yeah.
its way out.
In
but
fact, they gave most of it out as bonuses, which we were laughing about
rightfully
earlier.
so, Tom. Rightfully so.
Exactly. I mean, what doesn't kill you gives you a bonus. You remember the AIG bonuses in the 2008?
Well, it's crazy.
Woo.
Yeah, I mean, that was a crazy time. Yeah.
Ooh wee. Uh, so basically, somebody saying Evergrande is like Wirecard. I don't think it's the same story, to be honest. It's Wirecard would be like a flat out fraud, making up shit that doesn't exist. Evergrande would seem to be more like exaggerating the value of things you actually have in your inventory or projects. It
Yeah,
seems to be a distant cousin of the Wirecard
yeah. I
story.
mean, there's something fraudulent about having assets on your balance sheet that are worthless. But and this is even the issue. It relates to this idea around the problem with the VIEs, the what does
Oh,
that sound,
the
variable
VAs.
interest entities and so
Yeah.
on, that an awful lot of Americans and Westerners look at this stuff and they think they're investing they think they own a share in a Chinese company, and they don't. But even these companies are not necessarily meeting the accounting standards. They're not being audited the way an American company would be. And it's an interesting problem in the world of finance, because it relates to when you have a regulated industry, like the financial industry is very regulated, and you have all of this auditing and so on of the accounts of companies and so on. And what happens is that investors get used to that. You look at the way you look at the way a good American company works and how you get treated fairly as a shareholder and so on. And then what happens is you think that that's the way the world of investing works. And we'll say, you go into things like international investing, you go into things like crypto, we'll say even you do like spread betting or enter the world of derivatives, and you think you have the same protections that you do in a regulated financial product, and you just don't. And there's almost a problem that the high level of regulation almost builds a level of comfort in people, that they then go into this unregulated space and they're surprised when it doesn't work the way they thought it would.
Barney is saying the wonders of accounting magic, which is, I think, would be the best comment so far about this topic. Accounting magic is pretty much is Enron. If you know a little bit about the Enron story, this is accounting magic. Although Enron was a little bit different, if you're familiar with the story. I mean, you do Obviously, not you, Patrick. I mean, the audience. Shout out to the 900 people in the stream right now with no thumbnail clickbait. Oh my goodness. So Enron was basically I called Gordon Johnson the Nadia Comaneci of financial gymnasts, but I mean Enron was they wrote the book about it. Essentially, they would create these special purpose entities, which was it's just a subsidiary, and they would throw all the liabilities in there to boost the profitability of projects. Essentially, create this false presentation of success, and then so this
Hmm.
but this is a different story. I think again we're going deep into accounting nerd land, but
Yeah,
we're
but
talking.
a side
Go ahead,
point, like
Patrick.
you've got sort of the structure up there of kind of
Yep,
how a
VIEs. Yeah,
VIE works. And
and for
what's
those of you who don't
interesting,
know the initials, just for the audience, SPV means special purpose vehicle. It just means the subsidiary, and WFOE means wholly foreign owned entity. Again, just a foreign subsidiary. It just pointless abbreviations that not needed.
well, there's an interesting thing though. When these things first appeared, they kind of take it public, and the initial investors read a prospectus, right? And they read the prospectus, and it discloses all the risk, and it shows them this company structure and so on. And that's kind of the way SEC regulation works. Like the SEC is all about disclosure, and as you know, if there's something awful in there, as long as it's adequately disclosed in the prospectus and in the accounts, it's sort of you get what you bought. It can be
Yep.
the idea. But the problem is that once again, people get confused because we'll say if you invested when Alibaba or one of these companies
Hmm.
first went public by a VIE, you see all of those disclosures. But, it's been trading for a few years. When you go in on your Robinhood app or whatever, and you kind of go, Alibaba, that might be a good company, a Chinese growth stock. I'll invest in that. And there's no further disclaimers. Those things are all deep in a prospectus that no one looks at after the IPO. And it's kind of an interesting thing. I think Gary Gensler had an argument where almost the names of these products should be changed. Like, so instead of, when you go on like Google Finance and it describes Alibaba, and it'll say Alibaba is a technology company that runs auction platforms,
Yeah.
this, that, and the other in China. It's like, thank you for telling me what Alibaba is, but that's not what I'm buying. I'm buying it should say Alibaba VIE is a Cayman shell company with a contract with a company in China that you've heard of that may or may not transfer cash to this shell company and can be shut down at the will of the Chinese government.
Or any specific regulator,
Mm.
uh, but in China. But for me, the main thing that scares me about VIEs is kind of embedded into what you just described. I don't care about the Cayman Islands. I don't care. Offshore, it doesn't really scare me. What I think people miss out on is the huge difference between property rights and contractual rights, which is inherently a different quality of asset that should be valued completely different. And I'm sorry if it sounds like nerd talk, but I'll give you an example that kind of that's not going to make it sound as if I'm trying to use high words just for no reason. So imagine you want to buy a car, and somebody sells you a car. You get the deed for that specific car. You own that motherfucker, right? We just got demonetized shit. Anyways, so you own that car. Um, so that car is worth whatever it's worth, the fair market value of that car. I imagine a guy tells you, hey, I have a contractual right that I'm allowed to buy this car, and now I have it in my possession. So you can buy this contract off me that will allow you to buy this car someday from this dude. And the price of that contract is not going to be the same as the price of that car, because someday you might want to buy that car and the dude has already sold it and breach contract, which means you have to sue him and pay for litigation costs, not get the car, lose all this energy, and essentially it's a completely different asset class, which is worth significantly less than a property right. And to pay the same amount of price for a contractual right is, for me, as somebody who went to law school, is just like I want to bang my head against the wall and just smash it. It just doesn't. I don't understand why people can't see that. And I think Gensler specifically talk about it. Gary Gensler said, "These are contractual rights, motherfuckers. What are you
Mm.
doing?" That's the
Well,
problem, not the Cayman Islands.
yeah, no. But the thing is that in a booming market, people look by all of this. Like, it was a big deal a number of years ago. I forget, it might have been Snap or one of those tech companies. When they went public, they basically gave the public non-voting shares, right? Now, normally there's been a trend towards better and better corporate governance. And by that, I just mean better treatment of shareholders, because essentially, if we'll take, if you're running an oil drilling company and you said we're issuing non-voting shares, people would say keep them, But
Yep.
when these tech companies that were really hot went public, they realized that they could pack all of this nonsense into the prospectus and sort of, say that we'll do what we want. You have no votes. When Facebook went public, like, Mark Zuckerberg was almost acting like, he'd just run it however he wanted. And if he didn't want to make a profit, he wouldn't and get lost, And you would think that that would be a difficult thing to take public. And in maybe, in a post-boom environment, that would be the case. But, right now, or in sort of frothy, or what can I say, after a long bull market, people just they don't worry. They kind of, if you think of like how the Depression era mentality, like if you speak to
Yep.
your grandparents or whatever, like the level of suspicion they will have over certain kind of financial contracts, and it's because they've seen them go wrong. While we're in a period where no one's seen anything go wrong for a long time.
Oh yeah, breach of enforcing a breach of contract is as it's basically a choice between climbing Mount Everest naked with a broomstick up your butt, or no, there's no other choice. It's the same as IP litigation.
Mm.
Uh, IP litigation, breach of contract. These are very, very hard lawsuits to win. They're very costly. You don't recuperate your costs, and 99% of the time, unless the buyer, like if somebody sold it under you, the buyer doesn't have to give it back. You'll get some money. It's probably not exactly the value of what you. So it's a completely convoluted process that it's a lose lose.
Yeah.
So to compare that to owning a share in Microsoft or Facebook or Google, whether you think it's evil or not, it's a completely different asset class, and yet
Well,
it is
and
priced
even
completely the
it's
same.
within a jurisdiction where the rule of law has been really ironed out, and where there's maybe good reason to believe you'll be treated fairly. Because actually, another point back to Evergrande, another actually very interesting point is it's a big problem for people in China, because if you're in China, the only thing you can really invest in is real estate to a reasonable extent. Like they tend not to, they can't get their money out of the country. There's, sort of what they call financial repression, where they don't trust the idea of investing in stocks and things like that, probably quite rightly. And so the things they can invest in are all tied to real estate. And Evergrande has a wealth management arm, which once again is massive. And basically, regular Chinese people will have put their savings into these sort of interest-bearing products. It looks like a bank account, but it's tied to, the credit of Evergrande. And, a lot of the protests that you're seeing on the news are these people, they've put their savings in, and these financial products, could quite reasonably be worth nothing. And it's kind of
Yep.
down to what the government decides.
It's almost it's happening, and I'm sure it's happening. But I had this conversation multiple times. It's not even about China. Every single, because these kids haven't seen it yet. Every single company in the world can go to zero overnight, and we've seen this happen. I mean, if you remember,
Well,
like,
when you see it, it's always shocking, right? Like I
yeah,
made a video, I don't know, a week or two ago about billionaires who lost everything. And because people don't realize, a lot of these very wealthy people that you see, they're very wealthy because they own a company, and that
yeah,
company can go to zero or to, minus a rather large number. And it happens frequently enough, and even there's great companies that have either gone to zero or that have been so severely impaired that it's amazing to look at them and think like, how is this once great company such a in the gutter now? But it does happen.
People don't remember that these kids, but Enron was like the Microsoft or the Google of early 2000s, right?
That was a very widely held investment, like between Enron, WorldCom, all of those stocks. They were widely held, and even I'm from Ireland. During the credit crunch in Ireland,
You're from Ireland?
all of the banks basically went to zero, and if you were an Irish investor, you often invested in Irish stocks, which were bank stocks, and they evaporated, and in days. You know what I mean? Like, it wasn't there was no chance to get out.
You remember there used to be the big five back in the day, as far as accounting of, and the biggest one of them all was Arthur Andersen.
Yeah,
and they went belly up because of Enron.
yeah.
I mean, we've seen it happen. I mean, these kids, they don't think that, they think, well, this is a safe bet. There's no safe bets. You never know what's under the hood. Yeah, never know. Somebody says GE was amazing forever. Look at it now.
I mean, if you think that was one of the first, that was the only, up until they got thrown out of the Dow, it was the only stock that was in the Dow that had been there since inception. Like an amazing company. In fact, it was. Didn't all of Tesla's IP go to, I think it was Westinghouse, which became GE. So yeah.
So we're nearing 1,000 viewers on the stream on a rapid pace, which is insane. With no clickbait. It's just your name is clickbait, Patrick.
I don't know.
How does it make you feel?
Room this YouTube,
They think I either have Tyson Fury here or Agent 47, and they just click. Have you had a chance to look at Agent 47 since you haven't? No.
I have. I get quite a few comments on my channel now. So.
But you stopped doing the red tie. That's the look isn't the same. So I think we're just about to wrap up. I didn't want to keep you on too long about this. I do want to ask you a few questions. Somebody says your face is clickbait. I don't know if this is an insult or a compliment. To be honest, I'm not even being cynical. Is this a compliment? I hope it's a compliment. We have here a $5 donation from Brian P. What is the possibility Enron comes back? Yeah, I don't think that
it's low.
Don't see it. It's very low. It's competing with Blockbuster. It's either that or Blockbuster.
It could become the next meme stock. There's no reason not.
Is there a liquidation entity that still exists for Enron? Probably there is somewhere, something, right? These things usually take like 2 decades.
They often do, because I even think there might be a bit of Lehman still kicking around. Like I think.
He beat a Lehman kick around. Yeah. I visualize everything you say. So Patrick Boyle, he just misspelled your name. Can you please do a Hitman Let's Play stream? I don't see. I think there's more likelihood that Enron comes back than this is happening. I don't see it happening. So I do want to ask you one thing before you leave. So with everything we've seen in the past 10 years, as far as we've seen, somebody just mentioned Theranos. Nikola was in the same category as Theranos in my book, and there's nothing. I mean, I went to war with these guys. I'm not afraid to say it. I think it's a complete scam. Don't like Nikola. So Nikola, Theranos. We've seen what happened with the Lordstown. For some reason, I'm very deep in the EV about this, but I mean, now it's EV, but before that, it was medical, right? So how much money? That would be a really good study to do. How much money is laying around in these bubbles that, as you mentioned, that really have nothing under the hood? I mean, whew. Now with China,
it's funny, like when you talk about some of those companies, like what's it called? Theranos is kind of a great example. But there's many of them. WeWork as well was a good example of this. they're sort of fake tech stocks, you know what I mean, where they take on all the magic of Silicon Valley and the kind of big promises and whatever,
But
and people
I
get
gotta
all
call you out on
excited
this,
and
Patrick. I
Mhm.
have to call you out on this because you're talking about two different things. So Elizabeth Holmes and Theranos was a straight up fraud. That
Yeah.
motherfucker didn't work. So the other dude was a piece of shit douchebag, but he just overhyped and over exaggerated. I don't think
Right.
he
Well, that's even
defrauded
where I'm
anybody.
going. Sorry if I said fraud, I didn't necessarily mean that. But there's a lot of companies that they've worked out like that you can sort of brand yourself as a Silicon Valley tech kind of company and get this huge valuation and sort of sell everything on
Yep.
dreams. And many of these companies, these non-tech tech companies, like Wirecard as well, like it wasn't a tech company. That there's just a huge list of them where they sort of I don't know, like there'll be someone in like the brick industry, and they're like, "But we make our bricks in Silicon Valley." So-
You think that this uh, ease of getting money for these tech dream stocks is indicative of higher inflationary times coming? Because it seems like there's more money looking for a place to be parked. It's getting easier than 10 years ago to get this empty money.
It's very interesting because I think it's just certain sectors. Because it's an interesting thing. Like when people even say, "With all this money sloshing around," like that's a term you'll hear a lot in the current environment. But the money is sloshing for some people and really not for others. And the same goes for businesses. Like if I'm in Texas at the moment, and if you have a really great idea for drilling equipment or something like that, you don't find money sloshing around nearly as much as if you have like some, sort of nonsense startup idea. People are excited about kind of green technology in general, sort of financial innovation, things like that. But there's many sort of older, more boring businesses that definitely don't see the sort of sloshing of money that everyone talks about.
Somebody says when they wear the Steve Jobs turtleneck. Yeah, that.
I bought one of those for one of my videos. I'm gonna
Did you
start
do that?
cracking out
I
the
didn't
the
see it.
turtleneck one.
Oh, she had some influential people involved with it with Theranos.
Mm.
She had some legitimately powerful people who you don't think are chumps involved in this company.
They were big names, but they knew nothing about the industry she was in or about technology. There's people like Henry Kissinger, and you kind of, he's a big name, but he's not necessarily he's not Peter Thiel, you know what I mean? And
Yeah.
he's not like a sort of senior person he's not like a senior biologist who would understand how this stuff works. Like she had a bunch of kind of big kind of military and
Somebody
government
just
kind of
said it. Yeah,
names.
yeah. Yeah, she did. But you know what's gonna happen now? It's the same thing every time. These guys scam. They go to court, and then the lawyers scream, "Well, he was, or she or he was an optimist. He was a entrepreneur with dreams, and he failed." And
Mm.
every time it's the same argument. He was just an
Well,
optimist.
well,
It's
yeah,
easy to
I
be an
mean,
optimist when you. I mean, to her credit, by the way, she never enjoyed the scent of that money.
no, but I think the thing that's interesting about because even like why are the press so obsessed? And it's like because it's such a mad story, like
Yeah.
if she had taken all the money and gone crazy with doing all sorts of crazy stuff, it's more understandable. But I think actually it's sort of the craziness of the story. It's kind of I made ages ago the Charles Ponzi documentary, and it's a similar thing where you look at
That
it and
video
you kind of
popped.
go,
You,
what was he thinking? Like that's the thing that's so mad. Like you kind of go, he could have run off with it, but he didn't. He just kind of liked being a big shot, and he seemed mad enough to think he could make it work.
well,
And I
Madoff is the same story. Madoff also
yeah.
could have walked out easy.
Mm.
Uh, do you? By the way, is this your most successful video to date? The Ponzi video?
It is, yeah. It's
Oh,
it's kind of it's one of my older videos, but it did really well, yeah.
And you put yourself on the thumbnail with the little hat. Which was a brilliant decision. Um, so, uh, um, so somebody says, "I missed the first 40 minutes. What did I miss?" Uh, I love these comments. Patrick was doing a live stream of Hitman.
Yeah, and Tom
So,
took his shirt off.
well, I did, to my credit, before we went live. Luckily, I did, for all the wrong reasons. Anyways, this is a good time for us, I think, to end. Um, I'm just gonna thank Patrick again. I think there's a great deal of information on his channel. If you haven't checked it out yet, Patrick Boyle is the name. Finance is the game. You can go ahead and subscribe to his channel if you're not yet. It's probably one of the smartest things you can do if you want to learn about finance. And his quality of production has taken a step up for you.
Yeah,
So the
it's
YouTube
slowly
money,
improving.
the YouTube money is getting put to good use. But Patrick, I just want to thank you for coming over today. I was really not educated about Evergrande or anything that happened. Is specifically even more about the macro stuff that you talked about here. So this was really fascinating. I think the comments are all like they're all saying you're a piece of shit, but I mean, it's okay. No, you're the most liked guest ever. They absolutely love you. So this agent will return, most likely. I'm trying to get Patrick to do a full-time podcast with me, which he's kind of reluctant on doing, but I'm gonna get him. So thank you, everybody. Thank you for the almost 1,000 people in the chat. Thank you for Flying Emu for becoming a channel member. Appreciate it. This was an absolute blast. And the beauty of the stream is we're gonna keep them hanging. You know, they want more. We're gonna Michael Jordan this. We're gonna retire right at the peak of this. Somebody says real Susan Boyle. The fuck does it mean? I don't even. Who's Susan Boyle?
She's a wonderful singer.
Oh, is this one of those Got Talent singers?
Yeah, it's the
Okay. Yeah.
yeah.
Next podcast in 5 minutes. I don't think so. Maybe not mine. Liam Zach just joined right on time. We're about to get up. Thank you, everybody. Thank you, Patrick. This has
have
been
a
a
great
blast.
weekend, everyone.
Have a great weekend. Relax. Go watch my Iron Man video, and just make sure you do subscribe to Patrick. You're gonna thank me. Thank you, everybody. We'll see you in 5 minutes on the next stream.